Good morning once again, all of you. We're doing financial accounting 2, and the consignment is the topic. And today we'll just deal with uh, how the insurance claim to be adjusted when there's some abnormal loss. Okay, and let's go with the case. This is a case. Lubrisols Limited of Mumbai consigned 1,000 barrels of lubricant oil costing 800 per barrel to Central Oil Company of Kolkata on 1st January 2013. Lubrisols Limited paid 50,000 as freight and insurance. 25 barrels were destroyed on 7th of January 2013 in the transportation. The insurance claim was settled at 15,000 and was paid directly to the consignor. Central Oil took delivery of the consignment on 19 January 2013 and accepted a bill drawn upon them by Lubrisols for 5 lakhs for 3 months. On 31st March 2013, Central Oil reported, the details, below details. 750 barrels were sold at 1200 per barrel, and the other expenses are like clearing charges 11,250, go down rent 10,000, wages 30,000, printing, stationery, and advertisement 20,000. 25 barrels of oil were lost due to leakage, which is considered to be normal loss. That's a normal loss. So the net of the oil that is available is 975 barrels. That's it. Okay. Central Oil Company is entitled to a commission of 5% on all the sales affected by them, on all the sales that they undertake. Central Oil Company paid the amount due in respect of the consignment on 31st March itself. Show the consignment account, the account of Central Oil Company, and the loss transit account as they will appear in the books of Lubrisols Limited. Okay, now, as I read the case, I want you to give me a few details based on this case as you can see. Now, I just want some information from this case as I ask the questions. If you know, if you can attempt, that's good. Who is the consignor here? Who is the consignor?
Sir, Lubrios Limited, sir.
Lubrisols of Mumbai. Okay. Who
Yes,
is
sir.
the consignee?
Sir, Central Oil Company.
Central Oil Company. Okay. So we are clear with who is the consignor, who is a consignee.
Yes, sir.
What's the amount of goods sent on consignment?
8 lakh rupees, sir.
On consignment,
8 lakhs.
1,000 barrels multiplied with 800.
800.
Okay,
8
that's
lakh rupees.
sent on consignment.
Yes, sir.
There's a damage. 25 barrels were damaged. Okay, and 25 barrels of oil is lost in the transportation. Yesterday when I was giving you some introduction of the normal loss and abnormal loss, there is such a situation where you cannot avoid normal loss. Normally, it gets evaporated. When it is an oil, you can't just stop it. That's a natural phenomenon. By the time the oxygen starts at Visakhapatnam and it reaches Delhi, maybe 30 hours, 35 hours it takes. In 35 hours, so much of oxygen is lost. Okay? So that's a
Sir,
natural process.
sir,
Huh.
sir, these 25 barrels were leaked by the consignee, right?
25 barrels of oil were lost due to leakage, which is considered to be the normal loss. Now, what's your question?
Sir, this is done by because the consignee sold each barrel for 1200, right, sir?
Yes.
So we'll calculate this 25 barrels into 800 or 1200, sir.
No, no, no. We don't consider this normal loss. So leftover amount is 975 barrels. Out of this 975 barrels, normally it is lost 25 barrels.
Yes, sir.
So the leftover amount is 975. Okay, you have sent as a consigner, Lubrizol sent 1000. That's good sent. But 25 is gone. We don't want to consider that. What we had to consider is loss,
175.
abnormal loss of 25 barrels. Let's look at this. Yeah. We had to value the goods lost in transit. Okay, goods lost in transit. What's the total cost? The total cost is calculated with the multiplication by multiplying number of units, 1000 barrels per barrel rate, 800. Take the product of these two, you get 8 lakhs. And to this, add the consignor's expenses. Okay, now to come back, consignor incurred some expenses. Lubrisols paid, the second line I'm reading, Lubrisols paid 50,000 as freight and insurance. Okay, this is consignor's expense, 50,000. 8 lakhs plus 50,000 gives you 8 lakhs 50,000. That is the value of 1,000 barrels that were consigned. Okay, that's the value, right? Now, what's a loss? The loss is 25 barrels. 25 barrels. How do you value this loss? 25 barrels, uh, 25 barrels at what rate? The total cost of 1,000 is 8 lakhs 50,000. And if you want per barrel, 8 lakhs 50,000 by 1,000 gives you per barrel value, or value of the oil per barrel is 8 lakhs 50,000 by 1,000 gives you per barrel cost of value. Multiply that with 25, you will get the loss in the transit. Okay, which is abnormal loss, 21,250. This amount is deducted from 8 lakhs 50,000. Now, in addition to this, yeah, this amount is deducted. Okay, this amount is deducted. And add non-recurring expenses of the consignee. Now look at this. There are some non-recurring expenses. Non-recurring expenses. Now, what's the rule? We do not take recurring expenses. We do not take indirect expenses. Indirect expenses are also called as recurring expenses. So, like for example, we don't take go down rent, we don't take wages, we don't take printing and stationery, which are repetitive in nature, recurring in nature, in the calculation of the value of the stock of goods. Okay, only one thing, that's clearing charge. This is one time payment. Do you see this? 11,250. Only one time payment, which is called a direct expense, is added to calculate the value of the stock. So 11,250 is added. 8 lakhs 50 minus 21,250 plus 11,250. How much? 8 lakhs 40,000.
40,000, sir.
8 lakhs 40,000.
40,000.
And what is this 8 lakhs 40,000? This is the value of the stock. This is the value of the goods. Okay, goods sent to value of the goods presently. Now, this 8 lakhs 40,000 is the value of 950 barrels. Okay, 950 barrels. It's not case, but barrel. 950 barrels. How? 1000 is the total units, total number of barrels. 25 is already lost due to normal loss, which you cannot avoid. And 25 is abnormal loss. So the net of the units is 950 barrels. The cost of the value of this 950 barrels is 8 lakhs 50,000. If if 950 is if 950 is for 8 lakhs 40,000, and what is the per unit? Per unit is 8 lakhs 40,000 is 8 lakhs 40,000 by 950 gives you per unit value. Gives you per unit value. Okay. And how many units are left over? Look at this. Look at this. Uh, 750 barrels were sold. What's the total number of barrels shipped? 1,000 barrels. Okay, 1,000 barrels. How many units are lost in, as a normal loss? 25. So 975. And how many units are lost as a normal loss? 25. So 950 is the net of the barrels. Okay. Out of 950, 750 barrels were sold. Okay. Out of 950, 750 barrels were sold. 950 out of this 950,
Yes, sir.
750 barrels were sold. Okay. And what's left over?
200, sir.
200 barrels were left over. 200. That is the number of units unsold. 200 barrels. 200 into per unit, barrel per unit. 200 barrels and barrel per unit gives you the value of the closing stock or the value of the unsold stock. Okay, what's that amount? 1,76,842. Let's come to the consignment account. Okay, in the books of Lubrizol Limited, who is Lubrizol's consigner? In the books of consigner, you can understand. You can read it as in the books of consigner. Since the name is given, Lubrisols Limited, in the books of Lubrisols Limited. The account consignment to Kolkata account. Okay, there's a debit, there's a credit, there's a date column, particulars column, amount column, and simultaneously you can take on the credit, the same three columns, date, particulars, amount. Fine. What's the first entry? Yeah, there are three important entries on the left. That's on the debit. Okay. What are they? One is goods sent on consignment. Another one is charges or expenses of consignor. And three, expenses of consigning. And four, you can say fourth one or part of this third one, it is commission. Okay, right. So these are the entries on the left. Okay, look at this. Two goods sent on consignment. 1,000 units, 1,000 barrels. Okay, 1,000 barrels, 1,000 barrels of lubricant oil costing 800. 1,000 units at 800. Okay, is the goods sent on consignment. Consignment to Kolkata account, debit, took goods sent on consignment. 1,000 into 800, 8 lakhs. Okay, and what are the expenses? Expenses. There are some expenses, right? There are Lubrisols paid 50,000, and yeah, Lubrisols paid 50,000. When the consignor pays, it is written as to cash or to bank. But if the consignee pays, you will write the name of the consignee. In bracket, you can write the respective item. You can write to consignee or to, here, the consignee is Central Oil. So to Central Oil, hyphen, clearing charges, go down rent, wages, printing and stationery. Like that you can write. Okay, let's look at these items. 50,000 is paid by consignor. Okay, clearing charges paid by the consignee, 11,250. Go down rent 10,000, wages 30,000, printing and stationery, advertisement 20,000. Okay, right. Yeah.
Sir,
Yes.
sir, how we got that abnormal losses, sir? 21,250.
How we got abnormal loss? This is how you got the abnormal loss. 25 into 8,50,000 by 1,000.
Okay, sir.
This,
Sir, but 50 barrels were destroyed, right, sir? Total.
no, not 50 barrels. 20 is natural. You can't avoid that. You can't claim insurance for that.
Okay.
So there's no account. You don't need to account. That's lost.
Okay.
Okay. So two bank expenses of the consignee, I'm sorry, consignor, 50,000. There's only one item, so therefore we have taken it directly. Two central oil, that is two consignee. Okay, what are they? Freight 11,250, go down rent 10,000, wages 30,000, printing and stationery 20,000. The total amount comes to 71,250. Okay, right. Before we come to the commission, we need to know what's the amount of sales. Okay, let's go back to the problem. 750 barrels was sold as 1200 per barrel, or no, it is at 1200 per barrel. Okay, at 1200 per barrel. Let us come to sales, consignee sales, consignee sales. Yeah. By Central Oil Company. What's that? By consignee. It's written as by consignee. Because the name is given, we are writing name of the consignee, Central Oil Company. In bracket, or give a hyphen and write sale proceeds. Sale proceed. Or sometimes there's a practice in some books. You may see by consignee sales. Don't get bewildered. Don't get shocked. Okay, it's the same, right? It is their practice to write. Okay, so it can be by consignee sales or by consignee hyphen sales proceeds, or okay. So 750 barrels at 1200 gives you 9 lakhs. 9 lakhs. 750 into 1200 gives you 9 lakhs. Okay, 9 lakhs, right? And there is an abnormal loss that we have already calculated. This is abnormal loss, right? This is abnormal loss. Okay, 21,250. By abnormal loss, 21,250. Okay. After doing this, we will calculate the commission. Commission on 9 lakhs, calculate 5%. On 9 lakhs, calculate 5%. That is the commission payable to the consignee, Central Oil Company. To Central Oil Company, consignment account, debit to Central Oil Company. Okay, hyphen, commission at 10%, I'm sorry, 5%. 5% on 9 lakhs comes to 45,000. Okay, 45,000. Right. Next is the closing stock. Closing stock. You have already calculated the closing stock here. Buy closing stock. Okay. Buy closing stock or buy stock on consignment. We write here. Buy unsold stock. Buy stock on consignment. Buy closing stock. There are different ways of writing. Okay. So you can write buy stock on consignment account. 1,76,842. 842. Look at this one. When you look at this consignment account, don't don't you feel like it is like a trading account, trading and profit and loss account? It just resembles trading and profit and loss account. What is that you're doing? You're taking the purchases, it's like purchases and all the expenses, and you're taking losses, okay, and the closing stock and the sales, right? And you get profit or loss. Okay, so here what we understand is the consignment account follows the nominal account rule, debit all expenses, debit all expenses, credit all incomes. Now the resulting figure is taking the total 10 lakhs 98,092 and take that highest total on the debit side also. If you take the difference between 45 plus 71 250 plus 50 plus 8 lakhs, okay, the total of all this minus 10 lakhs 98,092 gives you 1 lakh 31,842. That is profit on consignment. Profit on consignment. Okay. Now, what's the next account that we have to prepare?
Goods sent on consignment, sir.
Goods sent on consignment. Okay. That's a very small account. Then we'll skip that. Okay. But in examination, you have to write that. Okay. Simply what you have to do is goods sent on consignment account. And in that, write down by consignment account 8 lakhs. That's it. Over. That's a simple account. Next one is consignee account. Consignee account. Central Oil is the consignee. Central Oil Company Limited account. Okay. What is that you do? Here, what all is debited will be credited in consignee's account. Now look at this. To, yeah, where is that? To bank you have written. This is consignor. Okay. To consignee, to Central Oil. All this will be credited in consignee's account. And all that is debited, credited will be debited. Like 9 lakhs is, yeah, 9 lakhs is credited here. It will be debited in consignee's account. Look at this. Central Oil Company Limited account, debit to consignment account, 9 lakhs. Okay, bracket or hyphen, sale proceeds, consignment. Okay, sorry. Sale proceeds. Sale proceeds. Okay, 9 lakhs. Okay, now I said all that is debited will be credited here. All expenses put together 71 lakhs, 71,250. And there's a commission also 45,000. How is that? 5% or 9 lakhs. Okay, and earlier he paid an advance of 5 lakhs. What is that? That's a bill. Whether it is a bill or check or draft or whatever, cash, it's an advance. So that advance also has to be adjusted. Okay, 5 lakhs. All right. So after deducting the amount that he paid in as an advance and deducting the expenses, deducting his commission, the leftover amount is 2,83,750. 2,83,750. This 2,83,750 will be sent to the consignor. Okay, a bank draft is taken or a check is sent along with the account sale to the consignor. That's it. This is consignee's account. Now, what is the question? The question is, show the consignment account, the account of Central Oil Company, and the lost in transit account. Lost in transit account also. Okay. Lost in transit account. That is abnormal loss account. Abnormal loss account. Okay. So what's the abnormal loss? You know, when there's an abnormal loss account debit to consignment to Kolkata. Consignment to Kolkata. What did you do here in consignment account? Look at this. In consignment account, you have credited it. Abnormal loss, 21,250. In abnormal loss account, it is debited. Okay. Abnormal loss to consignment to Kolkata, 21,250. And this is a total loss, abnormal loss. Out of this, you got a claim. Okay. Insurance claim. Come back here. Insurance claim. 15,000 insurance claim was admitted and paid to the consignor directly. Okay, that's what here written. 15,000 by bank or by cash. Maybe check is received by bank and hyphen or in bracket insurance claim 15,000. The balancing figure is transferred to profit and loss account 6,250. Right? That is the end of the solution. Any questions?
No, sir. Sir, we'll not make consignment account here, sir. We'll not make goods center on consignment account.
You can write, I skipped it because it's only one entry. Okay. It's only one entry.
Is it compulsory, sir, or no, sir?
It is compulsory.
Okay.
Just to save, few minutes, I skipped it, but it is compulsory.
Okay.
In examination, you have to show it. Or you want me to write that also?
Yes, sir.
Okay.
Sir, we'll write 2 entries in this, right, sir?
Look at this. One second. Just give me a couple of
Sir, can you share this in the FA1 group, sir? This
Yeah,
problem.
thing will be shared to you.